Thank you for joining us. I'm Susan Curry, Chief Operating Officer at Klingenstein Field Advisors, and I'm here with Greg Galinsky, our Head of Analytics and Risk Management. In our latest investment outlook, we cover the economic backdrop, why recent market performance has been unusual, and what large company concentration means for investors, plus the key items we're watching ahead. Greg, let's start with the economy. What should clients know as we enter 2026?
The main message is that the economy has remained resilient, even with some crosscurrents. Expectations for 2026 growth have improved, supported by steady demand and a labor market that, while cooling modestly, has held up reasonably well. Inflation has eased meaningfully from its peak, but it has not fully returned to the Fed's longer term target, and many households still feel the cumulative impact of higher prices over the past few years. Interest rates remain a central variable. They influence borrowing costs for consumers and businesses, and importantly, the discount rate markets apply to future earnings. So they affect both economic activity and valuations.
Let's put returns in context. How strong has the market been over the last 3 years, and why does that matter?
The S&P 500 has returned approximately 23% per year over the past 3 years, which is an unusually strong stretch by historical standards. The point isn't that a pullback is inevitable, but that periods like this often raise the odds of a choppier, less predictable market in the near term as expectations recalibrate. At the same time, the path forward will be driven by fundamentals, consumer health, overall economic activity, and corporate earnings, which, as we've discussed, remain on reasonably solid footing. So this is less a reason for alarm and more a prompt to review positioning, keep return expectations realistic, and stay prepared for periodic volatility without abandoning a long-term plan.
Turning to concentration, what does it mean in practical terms, and what did we see in 2025?
Concentration means a relatively small group of very large companies account for a large share of the market's value and therefore can have an outsized influence on returns. In 2025, large companies again had a meaningful impact on performance. Large company leadership was real, but it wasn't simply the biggest companies all won. A meaningful portion of the largest names did not beat the overall S&P 500. The bottom line is size helped, but outcomes were uneven, which made portfolio results more sensitive to specific exposures and made it harder to consistently beat the benchmark.
To close, what are the most important things we're watching, especially around the Fed, earnings, and valuations?
From here, we're watching three things especially closely. First is the Fed and inflation. Inflation has improved, but the last mile is often the hardest, and the path from here really matters. If inflation proves sticky or reaccelerates, the Fed may need to keep policy restrictive for longer. If inflation continues to cool, rate cuts become more plausible, but the timing and pace are important, especially given the risk of cutting too fast and reigniting inflation. Fed leadership dynamics also add a layer of uncertainty as we move into 2026. Second, we're focused on earnings, both the level of expected growth and how strongly companies deliver. The market is pricing in solid earnings growth, and a meaningful portion of that growth is concentrated in a relatively small group of very large companies. That increases the market sensitivity to those firms' results, their guidance, and the durability of how their growth delivers. And lastly, we're watching valuations. Valuations remain elevated versus long term history, but elevated valuations in and of themselves don't cause declines, but they do reduce the margin for error, meaning markets can react more sharply if economic data softens, earnings disappoint, or the interest rate backdrop shifts.
Thanks, Greg. To access the full text of our investment outlook, please click on the link below. We are always happy to hear from you. So if you'd like to discuss how these themes relate to your own plan and time horizon, please don't hesitate to reach out to us.